Hello everyone, I'm Mark Sain and welcome to Sain Investment Solutions. Please take a moment to pause this video and review the following disclaimer. Thank you for that. Welcome to week 43 of the Forex market review. Today we're going to look at two trades which we're currently in, as well as two trade setups approaching to see what we're looking for to make these trades hopefully become a successful trade. Without any ado, let's jump straight to those charts. So today we're going to start looking at the New Zealand USD. This one we mentioned last week that it was potential of possibly going higher. So looking at this one, we wanted to see some divergence on the lower side, and then we wanted to see the push back up higher. So here we had our divergence with a lower low in price and the higher AO. So I'll just go ahead and draw those in. So there's the low in price and here's the higher AO. Then what we would want to do is drop down to the 1 hour chart, and we want to see divergence on the lower time frame as well. And here we had a lower low in price with our higher AO. So I'll just go ahead and remove that 4 hour one. And that's what you can see on the 1 hour. So once we have the divergence on the higher time frame and on the lower time frame, we then want to see it push back higher with a bit of a pullback. Here we had our wave cycle of 1, 2 and 3. So we'll go ahead and draw those in. This is the start of 1 all the way up to here. It hit the 1 hour 200 EMA line. Wave 2 had its pullback. We had to come back to a minimum of 61%, which it did. Then we have our pushback higher for wave 3. We know this is wave 3 because this is the first largest AO. When it comes back below the zero line, we then move to the top, look left and find the highest point. We then grab from the start to the end of wave 3. We look for our pullback of wave 4, and wave 4 will generally come back to roughly around 50%. We like to see it at a minimum of 50, but 38.2 is the minimum level. It's come back, it's hit the support line, bounced off it, then it's come back down. It's now showing divergence on the lower time frame. This time frame, the lower line price and a higher AO again. Therefore, it's looking set to push higher for its wave 5 pattern. How far will it go? Again, just grab your Fibonacci expansion tool this time from the start of wave 3 to the end. Pull it all the way back for wave 4. And then first place of resistance is here. And if I scroll a bit more, we'll get here and then here. So we're probably looking at an ABC cycle. We might have a bit of a pullback for wave 2, push up for wave 3, up to those levels there. So what we're looking at, maybe having a stop loss of at least 50 pips to maybe 85 pips. And you could be looking at probably getting out these highs, before these highs for 1-to-1. Or if you're pushing a bit higher, you're probably looking at these highs here for 1-for-1, depending if you're using a 50 pip stop loss just below these current lows, or you want it out of this pattern, because a wave 4 pullback can't close down in these levels here. The other scenario which we're in is the Aussie 200. Now this one's starting to see a big decline, and it's looking on the daily time frame, it's bouncing off this daily 200 EMA line. What we wanted to see was divergence. We saw our higher high in price, and then we saw our lower AO. So that was our first inkling of it could be pushing lower. We then look at the 1 hour time frame, and it doesn't look like we saw any divergence on the 1 hour time frame, but that's fine. We had it on the 4 hour. We then see it step down and then step back up, hit this 200 EMA resistance line. You'd be looking at shorting around these levels here, putting a stop losses. You could put all the way up here of about 70 pips if you wanted to, or a bit more if you want to be very conservative, or only about 30-35 pips. It's then pushed all the way down to these levels currently of about 90 pips. So definitely would want to be looking a bit lower if you're looking for your 1 to 2 risk to reward if you're using this more conservative stop loss. But here we've got a wave pattern formation with what appears to be wave 1 with our pullback for wave 2. Came almost back to the 100% level but never broke those highs. We're then pushing back lower for wave 3. How low will it go? Again, first point, if you want to see where wave 3 will go, grab your Fibonacci expansion tool, and the first place of stopping was probably about here and now here, because this point here also matches up with the daily 200 line, which 200 EMA line, this purple line here. I think it would find some support around here, and then you're probably going to see a wave 3 pullback. So if you're not already in this trade, you could be looking for a potential pullback to around the 50% level. Just go draw those in again. I just deleted those when I deleted the Fibonacci expansion tool. So probably you want to see it pull back to these levels. Then you probably want to be looking at a 60 pip stop loss, and then how far will you be riding it to? Grab your Fibonacci expansion tool, goes from the lows to the highs and back up. So until this pushes back, we can't really draw this one in just there. But if we assumed it came to those levels there, then you'd be using your Fibonacci expansion tool for those areas. At the moment, I've moved my entry, which was up these levels, to break even, because it's moved a minimum 1 to 1. So I don't want to lose any money. So if it comes all the way back up here, I'll just stop out for break even. And however, I'm going for 1 for 2 to 1 for 2.5 on this trade personally. A couple of setups we've got is a USD yen. Here we can see 1, 2, 3. I'll go ahead and draw it. This is on the weekly time frame, 1, 2, 3. How far will be pulled back? Well, we'll expect it to come back about 38.2 minimum. So if you're looking at this one here, you're probably looking at it pushing back to there, or this 200 EMA line on the weekly time frame. On the daily time frame, it's have a bit of a pushback higher, but we are seeing on the 4 hour some divergence. So for me, I like to see this divergence before taking a trade lower. I'm currently long the New Zealand US dollar, so therefore for me to short the US yen is pretty much the same trade. So unless I can bring my New Zealand USD long position to break even, I probably won't look for a short position at this stage. But if I do, I want to see my divergence, higher high in price, lower AO. Drop down to the 1 hour chart. We're going to see our higher high in price, and we're going to see a lower AO. It's not much lower, but it definitely is lower between these two humps. First thing you want to see is the push, probably bounce off here, push back higher. Then you can look at selling it, maybe looking at risky 40 to 50 pips. And if you write it down to these bottoms, you can definitely make 1 to 2 to 1 to 3 risk to reward. On the daily charts, definitely would want to get out before this DSR zone down here. And even if you wanted to push down a lot further and then push back up, and then looking a bit of higher time frame, maybe 200 pip stop loss, you can make 300 down there. So you probably maybe when we're pushing maybe 150 pip stop loss max. Always ensure that your risk to reward is close to 1 for 2. So if you know you can only make about 300 pips down to the bottom here, then obviously don't risk more than roughly 150 pips stop loss, because you want to try to make your 1 for 2 before the next resistance areas. The final trade we're looking at as well is an oil trade. We see on a daily chart, we can see it's starting to push back higher. It's hitting this daily DSR resistance zone. On a 4 hour chart, we're starting to see some divergence, higher high in price with our lower AO. So once we've seen that, I'm probably expecting to push down, bounce off this 200 EMA and this other DSR zone here. So if it was to push down maybe a bit more down to those levels there, I personally would be looking for a push back higher. 1 hour chart, we don't have any divergence. between these hunts we do, but no immediate divergence. So I'm expecting to step down, push back, and you can see that pull back is going to probably match up with this 1 hour 200 EMA level. Probably looking at a stop loss amount about 100 pips and riding it for at least 200 pips. Again, where would I want to ride it to? Well, if I'm getting there and putting 100 to 200 pip stop loss, here I can make 600, so I can risk 200 to make 600. That's a 1 to 3 risk to reward. But I would be looking at a bounce off this daily 200 EMA line. So there would be a 1 for 2 risk to reward using a 200 pip stop loss. So that's two pairs we're currently in, New Zealand USD and Aussie 200, and looking at a short position on the USD yen and the US oil. So thank you for that. That was week 43 of the Forex market review. Please pause the video, rewind, and go at your own pace. I apologize if I go quickly, but there's always that option to pause these videos. Go to our websites, get some free training, additional videos, and just remember the way I like to trade is looking for divergence, then going down to a lower time frame and looking for potential entry positions, using support and resistance areas for entries and exits, and using the Fibonacci retracement and expansion tools for entries and exits. We at Sane Investment Solutions wish you all the best in your success. Take care. Bye-bye.